Digital banks took a third of your deposits in 3 years. Still think you're competitive? Here's what most bank executives don't realize. You're not losing deposits because customers are chasing higher rates. You're losing them because your digital experience makes customers feel like they're doing business with a museum. And the scariest part, you probably think you're already digitally competitive because you have a mobile app and online banking. But having digital channels isn't the same as being a digital bank. There's a difference, and your customers know it, even if your board doesn't. Let me show you what's really happening. The data tells a story that most traditional banks don't want to hear. Between 2020 and 2023, digital-only banks captured 34% of new deposit growth in the United States. Not 34% of their own growth, 34% of all new deposits that entered the banking system. That money didn't come from nowhere. It came from institutions like yours. And here's the thing that should keep you up at night. It's accelerating. In 2020, digital banks held about 8% of total retail deposits. By end of 2023, that number hit 23%. We're watching the largest wealth transfer in banking history, and it's happening in low motion while traditional banks debate API strategies and core banking roadmaps. Now, most executives I talk to think the problem is their core system. They'll say, we're on Fiserv, or we're still migrating to Jack Henry, or we're locked into an FIS contract for 3 more years. And yes, those are real challenges. The big 3 core providers serve roughly 70% of U.S. banks, and their systems were built for a world where branches were the primary channel, and batch processing overnight was acceptable. But here's what institutions we work with have discovered. The core system isn't the root problem. It's a symptom. The real issue is that while you've been waiting for the perfect moment to modernize, while you've been sitting in vendor meetings and reviewing 3-year transformation roadmaps, digital banks have been moving at a completely different speed. They're not faster because they have better technology. They're faster because they don't have your legacy process debt. Every workflow you've digitized is still built on assumptions from 1987. And your customers can feel it in every interaction. Let me tell you about a moment that happened 6 months ago in a boardroom not far from here. Robert Sullivan, a banking executive we've worked with for years, was sitting across from Marcus Chen, reviewing their quarterly digital banking metrics. Robert has these distinctive silver cufflinks, traditional bank insignia, the kind that signal decades in the industry. And he was adjusting them nervously as Marcus walked him through the data on his tablet. The bank had just completed a major digital banking upgrade. New mobile app, updated online platform, modern interface. They'd invested millions. And Robert was expecting to see customer acquisition numbers improve. Instead, Marcus showed him something that didn't make sense at first. New account openings were up, but only from customers over 55. Everyone under 40 was still leaving. Deposits from younger customers had dropped 28% year over year despite the new digital tools. Robert looked at the numbers and said, "What?" Every banking executive says in that moment. But we have all the same features the digital banks have. Mobile deposit, P2P payments, account aggregation. What are we missing? And that's when Marcus pulled up a comparison nobody had shown the board. He opened 2 apps side by side, their bank's app, and one from a digital competitor. He said, open a checking account in both. Time me. Robert started with their own app. Fill out the application. Estimated time 8 to 10 minutes. Upload documentation. Submit for review. Wait for approval, typically 24 to 48 hours. Then wait 5 to 7 business days for debit card. Then make initial deposit to activate. Total time to actually use the account, about 2 weeks. Then Marcus opened the digital bank app. Name, social security number, driver's license photo. Account opened. Virtual debit card issued. Make a deposit using mobile check deposit. The account was fully functional in 4 minutes. Not 4 days, 4 minutes. Robert adjusted his cufflinks again. But we can't do that. We're running on a core system that requires compliance reviews and documentation before account activation. And that's the moment everything shifted for him. Because Marcus said something that changed how he saw the entire business. You're right. Your core system won't let you do that. Which means you're not competing on features anymore. You're competing on process speed. And your infrastructure makes speed impossible. This isn't a digital banking problem. It's a core banking problem, that your digital channels can't fix. So they did something most banks don't do. They stopped talking about digital transformation as a front-end problem and started mapping every customer journey back to core system dependencies. They discovered that a simple checking account opening touched 14 different systems before completion. Loan applications. Even worse, they were using solid loan origination technology, but it was integrating with core systems through overnight batch files. A small business owner could complete a loan application in 20 minutes, but the bank wouldn't even see it until the next business day. Their competitors using modern infrastructure were returning loan decisions in under an hour. Here's what they did. They didn't rip and replace everything. That's the advice most consultants give, and it's wrong. Instead, they identified the 3 highest friction customer journeys: account opening, loan origination, and payment processing. And they built API layers that let modern applications communicate with their core system in real time. They worked with their core provider, they were on Jack Henry, and negotiated access to APIs that most banks don't even know exist. For lending, they accelerated their Abrigo implementation and connected it directly to decision engines instead of waiting for overnight batch processing. That one change cut small business loan decisions from 3 weeks to 3 days. Within 90 days, new account openings from customers under 40 increased 47%. Not because they changed the app design, because they changed how fast the bank could say yes. Robert told me later that the moment he knew it was working was when a 32-year-old walked into a branch, shocked that the account he'd opened on his phone 20 minutes earlier was already active. He'd come in expecting to fill out paperwork. Instead, the banker just handed him a debit card and said, "You're all set. So here's what you need to do this week." Not next quarter. This week. Pick one customer journey. One that you know is too slow. Account opening, loan processing, payment disputes, whatever keeps coming up in customer complaints. Map every system that journey touches from start to finish. Then call your core provider, whether that's Fiserv, Jack Henry, FIS, or someone else, and ask them one specific question. What real-time APIs do you offer that we're not currently using? Not do you have APIs? They'll say yes. Ask which ones you're not using. Most banks are sitting on access to integration tools they don't even know they've paid for. That conversation is the beginning of closing the speed gap. And if your provider can't answer that question with specifics, that tells you something else. It might be time to reconsider who you're partnering with. Your competitors already know this. You don't. Yet.